Money Vikings, welcome back. Money Viking G here. Want to do a quick one here today about staying calm, moving forward, keeping a control, keeping a management of our emotions, which is very hard for us as human beings. And it's probably the single biggest thing that makes people bad investors. You know, if you look at someone like Warren Buffett, arguably one of the greatest investors of all time, he probably more than anything, he's obviously intelligent, he's business savvy, he understands the ins and outs of business, etc. He understands the ins and outs of the economy in a lot of ways, although he's not an economist, but he probably understands the ins and outs of the stock market. But I think you would find that one of the biggest things that he's done over the years or developed is management of his emotions and his reactions to things. He talks about this a little bit with a sports analogy that I've heard of before, and he talks about being playing baseball basically, and how you don't need to swing at every pitch. You need to swing at the pitches that are within the strike zone, the ones that you have a good chance of knocking out of the park. And you just don't need to swing at everything. And I think when we're investors in the beginning, there's a lot of swinging at everything. Now, but the bottom line is, you know, that's one reason I've gotten more and more out of individual stocks over the years, is because it's really hard actually to pick individual stocks and succeed as a person that is just sort of living your life and working and raising a family. It's not what you're doing every day. You're not spending every day, you know, watching these stocks and being able to deep dive enough into a business that you'd really do any better than, you know, a self-cleansing S&P 500 index or a good conglomeration of various assets in a diversified portfolio that takes into account your personal risk tolerance and your time horizon. But, you know, I am going to bring this back to Bitcoin today because that is a lot of, you know, pretty focused on that lately. But Bitcoin is the ultimate asset in terms of managing your emotions because it does swing pretty wildly. But you just have to remember the times that it swings down, it swings as violently up. So, you know, there might be literally, you'll get some down day and everyone's doom and gloom and it's all over. And literally the next day, you know, it'll drop $2,000 one day, and the next day it'll go up $2,500, you know? So it's just part of it. But I would have you check out the recent Michael Saylor speech that he gave I think it was at the Bitcoin Policy Institute. And the biggest thing I think he is saying there, it's very interesting because he has this list of assets, and he talks about just where to park your capital as you live your life and build a life of true wealth. And he talks about all the things that traditionally people, you know, park their capital in. And the reality is that all of them are subject to risk that you cannot manage. Whereas the difference with Bitcoin is the only risk you need to manage is yourself. That's the biggest thing about Bitcoin, is you have to actually just manage your own self. You have one thing to manage, and it's your reaction to things. Now, if you know yourself really well, and you know you cannot do that, and some people can't. In fact, it might be possible that most people can't manage themselves, or at least half the population. It's very hard for them to manage their emotions and their reactions to things. And I'm a human too, myself included. It's something I've worked on for a long time and continue to work on. It's a very long evolution as a person, I think, and as a human. But at the end of the day, Saylor lays out, you know, if you park your money in real estate, for example, I like real estate investments, but you're subject to all kinds of threats: wildfire, flood, vandalism, bad tenants, a recession, government, you know, bureaucrats run amok that can raise fees or taxes on you. It's all kinds of things like that. If you have all your money in stocks, you are at the whim of people's preferences for that particular product. You're at the whim of the president of that company or the CEO and the board of directors and what they decide to do. I remember a real estate investment trust I used to have many years ago. It was called Store Capital, and I really liked that investment. In fact, it was so good that it was the only real estate investment trust that Warren Buffett, sorry about the noise, Warren Buffett has ever invested in. So, but the company went private. They went private equity. Everyone got, you know, you got money for your shares, but it was something I was just thinking you'd buy and hold. It's just an example of, you know, the best laid plans of mice and men. I thought that was going to be a good investment, and no, it wasn't. I mean, it was fine, but it wasn't a good long-term investment because the board of directors decided to sell the company to private equity. So there's everything else in the world is subject to risk. Cash, as we've talked about before, cash is not safe. Cash has extreme risk, to be honest. You have the risk of all the inflation that we've been dealing with. You have the risk, if you're in the United States, your risk is a lot lower. I'll admit that, because you have the advantage of, you know, the U.S. is the sort of the strategic reserve for the world. But at the end of the day, there's still risk to cash. You know, there's entropy, there's inflation, etc. So that stuff happens. And if you're in another country, you have extreme risk by keeping your wealth in the currency. If you have a business, your assets and your capital is at risk. Businesses can be great, but most businesses fail at some point. And that can also be risky. You have to deal with people and lawyers and, again, recessions and the whims of the customers. So anyway, that's the bottom line. It's, you know, it's very interesting. So I think Bitcoin solves for all this. Am I saying that all of our assets should be in Bitcoin? No, that there are people like that. But does it seem like a good place to have 10% of your capital? You know, I used to say 1 to 5, but maybe it's a good place for 10. I'm not sure. But it doesn't face a lot of those other problems. It cannot burn down. No one can tax it to death. No CEO can take it private. No country can actually ban it. They try to ban it, but is it really bannable? I'm not sure. I don't think so, actually. So anyway, those are my thoughts for the day. Have a great one, and see you on the next one. Bye.